Let's get right to it. Breaking down today's market action, we got Tom Lydon, his Global Trends Investments president, with 3 picks free to add to your portfolio. Robert Frost, Platinum Advisor Strategies co-founder and CEO, is going to tell us why he thinks investors need to be more selective. And Brian Battle in the pits of the CME. Brian, let's start with you battling in the pits. Stocks, just talking in general about how they feel. Did they feel a little high to you?
Yeah, I think that's a thing that we have going on here. We've got this tension right now between momentum and Fed policy, Fed liquidity, juicing markets all the time. And now we're trying to start to rotate into fundamental. Like you said, the economic data is coming out mixed. So I think that's where we get this back and forth swing week in, week out. We have gains, we have losses. It's because we're starting to rotate back into maybe more fundamental analysis. But certainly in the absence of news, and there's plenty of bad news around, in the absence of news, the thing just seems to sort of grind higher or stay steady.
Well, you know what, Tom? I mean, we did get some fairly negative news out of the China manufacturing sector this morning, and in Europe as well has been a little rough. Ukraine aside, even from that, the economic data from Europe is a little rough, but it was U.S. manufacturing that kind of brought the markets back today. I mean, is that something that we can hang our hats on past today?
Well, absolutely. I think it's risk off right now. There's a lot of money that's coming out of the market. I think there are 3 areas to really concentrate on: energy, utilities, and consumer staples. These are 3 sectors that during those summer and fall months, when you're supposed to sell in May and go away, you can buy in May and actually do quite well.
But sell in May doesn't go, that phrase doesn't really even hold water anymore, though. I mean, if you look at the numbers, I mean, if you look at the data, Tom, I mean, that's not really what the markets have been doing for the last several days.
In the last 4 years, Cheryl, absolutely. But we're here in a 5-year bull market, and we haven't done anything this year. The market's trying to get some traction. People are turning to dividend-oriented stocks, stocks that have good cash flow, stocks that have good earnings, and they're getting away from a lot of the high flyers. I think dividends and stable earnings are really where people are concentrating.
Robert, I want to be an optimist. I was born an optimist, but looking at the jobs figures and the growth figures from last week do concern me a little. I know the unemployment rate ticked down, the overall number ticked down quite a bit, but you look at those 800,000 people that walked away from the jobs, the job participation rate looking terrible. To me, you add that to the fact that median income in this country is down 3% since we began to recover, and median income is supposed to go up after a recession. That means the economy's shrinking to me. What does it mean to you?
Well, I mean, the headline numbers were great, and then you're right. I mean, I think it's the old expression, if you torture numbers long enough, they'll tell you anything. Because as we looked a little deeper into the numbers, we saw that it was true. I mean, the economy's losing a lot of jobs. And I think it gives all of us a reason to pause and say, you know, what do these unemployment numbers, what are they really telling us? The unemployment numbers coming down, yet people are still losing their jobs and they're still out of work. You know, people wonder where is the focus of the employment numbers, and those numbers Friday didn't really give us much direction. Although the ISM numbers that came in today, very positive. Maybe that gave us a little bit more reflection on the overall economy.
Given that uncertainty with those numbers that we saw, the overall economic numbers, how would you bet on that? How would you bet on this economy in the market?
I think it's slow positive growth. I mean, we think that the economy is still plugging away. It's not growing at the pace that we would like. But the fact is, you know, if you were to look back to 2008, when we really were losing 800,000 jobs a month, where you look where we are today, the economy's come back a long ways. What our research shows that what causes a bear market is a recession. And right now we look at the economic data, although there are some things that give us reason for pause, most of that data really shows that the economy is getting a little better, not getting worse.
Well, but certainly, Brian Battle, all of this makes, again, or could make the outlook for stocks a little uncertain as we go through the next months. I mean, we continue to have this, as David just mentioned, whether it's a wage stagnation, labor participation, the Fed is watching all of this, the Fed has been fueling this rally, but doesn't that make the volatility in your mind more certain for the summer than it normally would be?
Right. So what we're talking about, the stock market and the economy, and when you look at the economy, it doesn't seem like we're going anywhere. It seems to be slow growth. So what that predicates, so that what that means you should do in the stock market is buy dividend stocks and buy. But how does a dividend stock at 3% look if the 10-year's at 4%? So we have a very small margin of error because rates are so low, because dividends are so low, because credit spreads are so narrow. I think we're in very treacherous territory right now, because if any little thing happens, like there's a war in Eastern Europe, imagine that would happen, or that it actually even slows down a little bit more here. And the IMF just turned down their prescription for growth this year to like 0.8%,
right,
and then 1.5% for next year. So global demand doesn't seem to be there. Seems like thin ice from a fundamental economic point of view. That doesn't mean the stock market can't keep rallying.
Lydon, hold on a second. Tom Lydon, I'm smiling right now, or I'm feeling glad inside, because I just got word that my little Apple stock, my tiny little portfolio of Apple stock, is doing better because Apple is trading over 600. At the end of the day, it's settled at $696 a share. That's the first time it's traded over 600 in a long time. Is that indicative of anything? I know you're not a stocker. You believe in ETFs, but that makes me happy. Does it make you happy?
Well, it does, and that's another classic example of dividends. If you look at kind of grandpa's old technology stocks, Apple's one of them. Intel, IBM, Cisco, all of them have hordes of cash, ramping up their dividends, and that's what investors like. So that's one of the reasons why Apple's hitting new highs.
Okay. By the way, Adam Shapiro has the numbers on AIG, the big insurance company. Remember, we bailed it out. Adam, what are the numbers? I know they're very difficult to cipher through.
We're going to hold on giving you the revenue number because they missed on some of their premiums, what they wrote in premiums. But let's give you the earnings per share. That's a beat. It's $1.09 adjusted earnings per share. The Street was expecting $1.07, and the board announced a dividend payable in June of roughly 12.5 cents. We're going to get back to you on all of this, David.
Okay. By the way, Brian, any indication from AIG's number? AIG, by the way, has been up over the past 3 months, up over the past year. Do you look at that number? Is it with any significance there?
AIG is so big and so complicated. I defy just about anyone to understand what's going on in their balance sheet. They have loss carry forwards, they got premiums. It's a gigantic thing. It'll take a couple of days to figure out what's going on there. Right. They're not losing money. Other than that, that's probably pretty good.
All right. And Robert Frost, a really quick last question to you. Certainly, as we look at the numbers coming through from the end of the day, moving into tomorrow, does it make it just a little bit more bullish? I want to give you a last word here, Robert.
It does. I mean, everybody's trying to kill the bull. The bears think the bull market's over. Everybody's been calling for this correction in the market. Maybe what we really got was, rather than a 10% pullback and then a rebound in the market, here we are in May. The market's been flat the first going into 5 months. Maybe what we really got was a little bit of seesaw action rather than a big pullback. A steady market throughout the first part of the year. We're very bullish.
So a flat market is the new pullback. That's an interesting perception. Thank you very much, guys. Tom Lydon, Robert Frost. Brian, we're going to check back with you in a couple of minutes.